There were huge moves in the FX space in the past week, and the biggest beneficiaries of those moves were the Australian dollar and the New Zealand dollar. So in this video, I'll be breaking down why the antipodean currencies were the biggest beneficiaries of these moves and what is most likely to happen in the upcoming week or in the near term. Traders, welcome to my channel. In these videos, I'll be breaking down currency pairs and also commodities such as gold and explaining what is impacting those currencies and what is most likely to happen in the future. So as I've said earlier, that the antipodean currencies were the biggest beneficiaries of these huge moves that happened in the past week. So in order to understand why antipodean currencies are actually strengthening against other currencies, as they have been the two strongest currencies since the year began, we have to go back to what happened last week and what has been happening for the past few weeks. So last week, in this video, we'll start by analyzing what has been impacting the Australian dollar as a single currency. So last week, the Australian dollar saw some huge moves against almost all the G10 currencies, and the cause was that on Thursday in Australia we saw the release of their labor market data, and what we saw was a huge uptick on employment and a decline in unemployment rates. So in Australia, if you look at the employment change, the market was anticipating that the Australian economy was going to add 30,000 jobs, but what we saw was double that estimation, where the Australian economy added 65.2 thousand jobs, which beats the consensus and also beats the previous number, which was minus 28.7 thousand jobs. So that increase in employment changes was mainly driven by an increase in full-time employment, where we saw 54,000 jobs that were added in full-time jobs, and we saw that unemployment rates as a result ticked down from 4.3% to 4.1%, both beating what the market was anticipating, as the market consensus was an increase of 4.4%. So this is huge news for the Australian dollar, and it is showing that the Australian labor market is resilient and is adding jobs, which is good for the economy. And though that wasn't the only positive news that we saw from the Australia last week, as during the last day of the week on Friday, we got the PMI data for January, and we saw that all the PMIs beat the consensus and also beat the previous number, which shows that the Australian economy is resilient. So the first PMI number we're going to look at is the manufacturing PMI, where the market was anticipating that the PMI was going to decrease to 51.3 from the previous number, which was 51.6, but what we got was an outbeat number at 52.4, which shows that the manufacturing side of the Australian economy is resilient more than the market is anticipating. And also we saw a big jump on the services PMI, where we saw an increase of we saw the PMI number move to 56.0%, beating the market consensus, which was 51.5, which was way above the 51.1, which was the previous number. And the overall PMI shows a 55.5 number from 51, so it shows that the Australian economy is strong. So if we see the economy performing well and the labor market is performing well, that gives the Australian economy some support, as we have seen that the Australian dollar has been outperforming other currencies due to the fact that they are having sticky inflation, and also the labor market now is starting to show that it is performing well and the economy is resilient. As a result, we saw the Aussie dollar outperform currencies such as the US dollar, as you can see here. So last week, on the weekend, the US president had 10% tariffs on Europe and 8 European countries on the weekend, and we saw the stock market turmoil. And after he actually laid back on those tariffs, we saw there was risky assets move to the upside, as their risk that was being priced in was abated. As a result of positive global sentiment and also positive economic data at home, this has helped the Australian dollar outperform other currencies. And here you can see, even through looking at the technicals, the Australian dollar has been outperforming the US dollar, and it has managed to move past this resistant level and this 0.68 handle, which has been hard for us to break in quite some time. So here I believe that the move has been more to the upside, and a pullback is required here. I think the move is stretched, and we might get a pullback, whether we might get one where we move to the upside a little bit and come back to test this support area, or even move to test this 0.8 thousand handle, which is a huge number that hasn't been broken in quite a long time. So I believe here that we are going to continue to see the Australian dollar actually benefits against the US dollar moving forward. But what I want us to also keep in mind is to see what will actually drive the Australian dollar in the upcoming week, because I believe that in understanding what will actually happen in the upcoming week will help us understand how the Australian dollar will actually behave in that coming week. And the marquee event for the Australian economy next week and the Australian dollar is the inflation number. So here the market is currently expecting that the month-on-month inflation number will actually increase by 0.9%, which is way above what we saw in the previous month in November, where we saw a muted 0.0%. And the year-on-year number is expected to increase from 3.4% to 3.6%. So if this actually materializes, I believe that this will actually offer the Australian dollar some support again, as it will reinforce to the New Zealand or the RBA that it needs to actually raise interest rates, as it has emphasized before that the next move will actually be a rate hike rather than a rate cut. So if we see inflation become sticky, the economy is performing well as we saw before, and the labor market is robust, that will actually warrant the Australian dollar to give a hawkish stance on the upcoming meeting, or even emphasize that they will hike interest rates sooner, which will offer the Australian dollar support. But if we get an undershoot in these expectations, I believe that that will pressure the Australian dollar a bit, but it won't necessarily sway the Australian dollar from its upward trend that we have seen it do against other currencies. So let's move on to what the Australian dollar might do against the the British pound. So in this currency pair, I have been bearish this currency pair for quite some time due to the robust economy from Australia, and what has been a weaker labor market that we have seen happening in the UK. And I believe that the UK will actually start lowering interest rate this year to support or stimulate their economy. So as we have a strong Australian dollar, we have continuously seen it outperform the British pound, and in doing so it has been overstretched to the downside. So I believe that a pullback also here is warranted, as I expect the GBP AUD to move towards this 1.99 level and move to the downside in the longer run. And also I would also watch I'm also watching the Australian dollar against, I would move toward my favorite one, which is the Australian dollar against the Japanese yen. So when it comes to the Japanese yen has been weakening throughout the last year against the Australian dollar, and as the Japanese government has actually had a new prime minister who favors looser fiscal policy and also looser monetary policy. This has also put much pressure on the Japanese yen, as it has stopped the Bank of Japan to actually raise interest rates, as the new prime minister actually favors looser fiscal policy. So this has been shown by price action, as we have seen the Australian dollar actually move to the upside against the Japanese yen. So on Friday, something happened when it comes to the Japanese yen, as we saw a huge move where the Japanese yen actually strengthened against all other currencies, and the market is speculating that maybe the Japanese government actually intervened in the market. But this time around, if the Japanese government did intervene, I don't necessarily believe that we will see the Japanese yen actually strengthen in the long run, as we have seen that there is so much pressure coming in Japan, as their prime minister favors looser fiscal policy and their debt is unsustainable. Also, the inflation is starting to move towards the budget's target, which is expected, maybe it might move even lower than the 2% target, which will make the budget reluctant to raise interest rates, as inflation will be under control. So I believe that in the long run we will see the AUD JPY currency pair move towards it. Maybe it might come towards this 106 level, or even move lower than that. But I believe that in the long run we will start to see this pair move to the upside and continue its upward trend. When it comes to the New Zealand dollar, it is important that we first understand what has driven it to the upside, and in doing so we'll have to go back and understand the economic events that have played a strong role into the New Zealand dollar becoming the second strongest currency this year, and that comes in terms of the economy. Last week the New Zealand economy released its PMI data, which usually gives us, it is the leading indicator that shows us or gives us an idea of how the economy has been performing. And as you can see here, when we look at the composite PMI, the previous number was 48.8, which showed that the composite PMI was in contraction territory. So here's the rule here: a number that is below 50 shows that the economy is contracting, while a number that is above 50 indicates that the economy is expanding. So if you look at the composite PMI, it moved from 48.8 and beating the market consensus, which was 49.6, and moved to 53.7, which showed a robust move in the composite PMI. And when we look at the services PMI, we can also see that it was also conveying the same message, that the New Zealand economy is actually expanding as it moved from 46.9 to 51.5, which has also helped the New Zealand dollar against other G10 currencies. But that wasn't the only news that played a huge role in the Australian economy in the past week and in the Kiwi dollar. But what was the most important event for the Australian dollar last week was the inflation number, where we got the quarter-on-quarter number and the year-over-year inflation numbers, and both those numbers beat expectations. When we first observed the quarter-on-quarter number, the market was anticipating that inflation was going to increase by 0.5% quarter over quarter, but what we got was an upbeat number of 0.6%. And year over year, the market was anticipating that the year over year number will remain at 3%, but what we got was an uptick number of 3.1%, which showed that inflation is becoming stickier in New Zealand, and this will help the Reserve Bank of New Zealand to actually change its tone from being a central bank that was dovish and looking to cut interest rates aggressively last year into a central bank that will now have caution about cutting interest rates, and in fact maybe start moving towards raising interest rates as its neighbor country in Australia. So this has helped the New Zealand dollar actually strengthen against other currencies as a result of a resilient economy and also a sticky inflation. But what we need to understand is to view what will actually drive the New Zealand dollar in the coming week and the near term. So if we look at what will actually play out next week, so let me see here. I think I've moved way past what I was supposed to show. So yeah, here's the week, and we need to see what will actually drive the New Zealand dollar. So when we look at the New Zealand side of the equation, there are only two economic events that will actually play a significant role in how the New Zealand dollar actually behaves, and that will come in the form of the balance of trade and also the business confidence. But I don't believe these two events will actually move the needle that much. So what we have seen and the strength that we have seen will actually move the needle, but you cannot expect the market to become these days, as any time of the day you can hear that the US president has done something or the geopolitical tensions are starting to rise. So those might be the ones that affect the Australian dollar more than just their data that they will release. So if we look at the New Zealand dollar JPY exchange rate, we can clearly see that it has been moving to the upside. And what has been driving this move to the upside has been more of the Japanese side of the equation, as the Japanese government has elected a new prime minister who supports looser fiscal and monetary policies. But now, this robust economic data coming from the New Zealand dollar will also exacerbate this move to the upside. So here, I'm waiting for a retest towards this level, as you can see that this currency pair is now stretched. A pullback is now warranted, and the pullback may come in a form of a move towards this support area here, and we can move to the upside, or we can move a little bit lower and touch this 92 level and then move to the upside as we continue our move here. So another currency pair that we need to pay attention to, that has seen the New Zealand dollar actually benefits more against, is the pound sterling. When we look at the pound sterling, you can clearly see that the New Zealand dollar has been gaining strength more due to the fact that the pound sterling also has weaker economic growth. The labor market is weak, as we see that in the previous year they've not actually added jobs for the whole year, which has forced their currency to the downside, and that has benefited currencies such as the New Zealand dollar. And here you can clearly see that the New Zealand dollar has been strengthening against the pound. But on Friday, we have seen the New Zealand dollar actually weaken, as the pound got a positive surprise on retail sales, which has offered some support in the short term. So that gives us, or gives this pair, some breathing room, so we can see the pullback actually materialize, and we can see a move towards this resistance area here, or even touch the trend line. Then in the long run, we can clearly see that the GBP NZD will move to the downside, as the New Zealand dollar has a strong economy compared to the pound sterling. We have reached the conclusion of this video, and traders, please subscribe to the channel if you want more content like this, as I will be posting videos like this in the future. And also subscribe to the channel and like the video, and comment on which currency pairs or even currencies you want me to analyze next. So from my side, it's all. I wish you a good and productive week, and trade safely.